Shares of Shopify are sharply lower this morning because the company says it's expecting sales growth to slow in the current quarter. Not a lot, but it doesn't matter. Joining us now to explain in a first on CNBC interview is Shopify President Harley Finkelstein. Harley, thank you for coming on. Good to see you as always.
Thank you, Jim. Good to see you as always.
Okay, so I want to distinguish without denigrating the reportage, that this quarter that we're currently in is not anything that I would regard as being a dramatic deceleration from the quarter that was just stupendous. But somehow people are saying it does mean that the big beat and raise days are over for Harley and for Shopify. True or false?
Yeah, that's totally false. I mean, the amount of growth drivers we have in this business are larger than we've ever had. Let's just talk about the quarter we just reported on because, it's important. You're seeing the strongest version of Shopify, Jim, in our 20-year history. If you exclude logistics, we had 4 consecutive quarters of over 25% top-line growth. For Q1 alone, we had $2 billion of revenue. GMV, which again is a proxy for how our merchants are doing, was up 23% year on year to $60 billion in the quarter. And Shopify now powers over 10% of all U.S. e-commerce. So let's talk about the things that also matter right now in this climate, which is profitability. We saw $1 billion in the quarter of gross profit dollars. That's up 33%. And we generated free cash flow of $232 million for the quarter, with free cash flow margins doubling from Q1 of last year. So when you look at this, you're seeing a company that has operating discipline, but also has a ton of growth drivers.
Okay, and I think that we all believe that and know that, and that's one of the reasons why we have loved Shopify. Now I'm going to read from a Reuters story. This is a Canadian Reuters story, and it says the company said on Wednesday it expected second quarter revenue to grow at a high teens percentage, disappointing investors who had seen average growth of about 26% over the past few quarters. Have you disappointed those who were looking for something like 26%?
I mean, let's talk about guidance for a second. Our guidance for Q2 points to free cash flow margins similar to the 12% that we just achieved in Q1, and that combined with pro forma revenue growth in the low to mid-20s. This business, Jim, can deliver growth and margins, all while creating and leading into massive investment opportunities in our growth. It's somewhat, counter-cyclical, but we see opportunities right now in the market. On the marketing side of things, what's really important and something that I think most people miss about Shopify is that we think about marketing the same way we think about products. We build great solutions. We have the best internally developed tools to drive decisions through data. And the results prove that we are world-class at growth. And so when we see these opportunities where we can drive incredible payback periods within our guardrails, we're going to take those opportunities because by 2025, those are really going to pay off for us.
Okay, so why not increase your outlook from where it was? Why not say revenue, instead of revenue growth at high teens percentage, why not say, listen, it will be 20%, not a problem?
Yeah, look, we think about what we can do right now. And also some of the things that we do, because we are so long-term focused as a company, this is, I think, almost our 9-year anniversary since the IPO, since I first came on your show in 2015. We have always over-delivered, and that's important to us. But we think when you look at these drivers, I mean, you look at enterprise, for example. When we went public, Jim, the enterprise business on Shopify did not exist, and yet now it's gaining massive traction with SoulCycle and Tapestry and Overstock and BarkBox all coming on. When you look at our offline product, point of sale, which again did not exist at our IPO, that grew, the GMV from offline retail grew 32% on the quarter. We saw 52% location growth in the quarter with merchants that have more than 20 physical locations. B2B is another massive opportunity that didn't exist even 2 years ago. And then not to mention international. We are no longer just the leading company in North America. We're now seeing massive growth in places like Europe. And in fact, Q1 GMV growth internationally was over 38%. That's a third consecutive quarter of growth above 35%. So we see these massive growth drivers, but we can do 3 things. We can grow top line, we can grow bottom line, and we also can make investments for the future. And we want to be able to make those investments for the future, which is why we gave the guide that we did.
Yeah, Harley, it's David, and I appreciate your enthusiasm and your long-term view. I do wonder, though, are you simply saying that those who are selling the stock right now are wrong to do so? I mean, a 20% decline in your market value in one moment is not an insignificant decline.
I mean, one of your colleagues told me this, when we first went public, that don't look at the day-to-day stock trade, build the best, most durable company. The way that companies there's very few companies that can do this, but the companies that are able to build the longest term durable growth do those three vectors: growth on the top line, growth on the bottom line, and invest for the future. And we're doing all three of those things, David. It's really important for us to actually focus on the long term. I'm going to my 15th year at Shopify. Toby is going to his 20th year. This is unequivocally the best team with the best products and the largest market opportunities Shopify has ever had.
Harley, Jim has used a word called normalization of late. And we've been talking about at least, and again, Jim, I'm putting words in his mouth.
No, it's fine.
Brown shoots as well. But I am curious to get your view. Are things slowing down at all in terms of what you are seeing in your universe?
I mean, let's talk about the macro. So, first of all, the consumer remains resilient. I mean, you're seeing that. I mean, GMV on Shopify is a great proxy for that. But part of the job that we have at Shopify is to arm our merchants, the millions of merchants, with the solutions to compete and succeed in any environment. And we've proven quarter after quarter that we're giving merchant tools they need, and they're outperforming the broader economy. That's been the case for well over a decade now. Now, the other thing to think about is obviously we're well known, David, as the company that has these great direct-to-consumer brands that the consumers love and they feel affinity to, and that's incredible. We've always had those. But more recently, we're now seeing brands that are a little bit less discretionary come to Shopify. I mean, Figs, for example, whose scrubs are in hospitals all over the country, Nestle, Heinz, Staples, Butcher Box. These are the brands also coming to Shopify. And whether you look at these direct-to-consumer brands that are beloved, or you look at these more discretionary type of brands, Shopify is the recipient of all these. And in particular, on the enterprise side, that's an area of business that we think is ripe for the taking. And our product is better, our pricing is better on that. We think there's massive opportunity to get more brands on Shopify. But on the macro side, we're seeing that the consumer is buying from brands they love.